Hey folks, welcome back to Money and Politics, and this week is going by fast. It's Wednesday. Of course, we didn't get back from Nashville until, I think, yesterday. Monday night. So again, Monday night. Anyway, it's gone by fast. I showed a number of photos yesterday. I'm not going to show a lot. Here's, of course, one of my favorite for obvious reasons when I got to meet with Brian. I did cover a lot. If you missed last night's video, I talked about Nashville and how we all got together and had a great group of people. Let me show one more photo. There's all kinds of pictures. I mean, but, you know, that gets to be old after a while. But let's see, quick play. This one. So this is one I wanted to bring up, and there I am. I like the angle on this. I don't even remember this being taken and how this was taken looking down like this. But so there I am with right next to Rebecca in the middle there, smiling, and then Allie on the far right. And Allie, if you don't know, so these are two people worth knowing in Humble. Allie is the first person to ever buy an NFT, and she bought the photo of Clint Eastwood because he was one of her father's, or her father. Clint Eastwood was one of her father's favorite actors, so she bought the very first NFT. And you can see the crowd behind, and I took a picture with probably everyone there. Something I often, in fact, I never do, and I should, so I'm doing it here. Comment and subscribe on the videos, and I try to read all the comments. Sometimes I won't necessarily comment back. Sometimes I will. It depends what's being said. So we talk about stocks primarily here. We talk an awful lot, obviously, about Humble. We talk about others. I'll talk about some other tonight in addition to Humble. And I'll talk a little bit about major policies. We call it Money and Politics, and I'm actually not, I've hardly done anything on politics. I had intended to do more when I started, and I don't want to do politics to the extent that I am turning people off from a partisan standpoint, but here and there are some major issues. So let's get the other out of the way here. That if you want to follow me on Twitter, and before I forget to say it, folks, I'll make this a little shorter tonight because as I tape this, it's going on 5 o'clock, and I'm going to be on Twitter tonight. I'm going to be on Twitter Spaces tonight at about 6:30. Now, Thomas will join us, but he may not be able to join us until about 7 p.m., and this is Central Time. So adjust accordingly. So anyway, that was, as I say, Rebecca. I love that picture that I was just showing you. Going back, if you want to email me, hopefully you have that, and that is at Gmail. So let me take that out. Money and Politics now at Gmail. So there you go. Now, today, let's just get Humble out of the way here. Not a lot going. The markets were flat, and we see that Humble went down a couple of pennies. It relatively light volume, 3.6 million shares. So there you can see the activity. It wasn't even down that much. You know, at some points it was up. And there's our 5-day chart. I tell you what, though, coming from the enthusiasm, the excitement of Nashville, and you look at the stock price that we have here, coming from the enthusiasm from Nashville to a $78 stock, never has there been more of a dichotomy, in my estimation, between the potential of a company and its stock price, 78 cents. That's just remarkable. As I said last night, I don't have any major insights to offer you that are not known by everyone else. I did get to talk to people in Humble management. Some of it, a lot of it was social. I did talk to Brian, who, again, credit to him that he was, not standoffish. He was welcoming. And he basically said, as I talked about a number of the things that I've talked to you about over the last 7, 8 months, he said, basically, I'm on target. I don't think, he didn't tell me I was off on anything. I did run several things by him, and he agreed with what I was saying. So what I would say before I move off of the Humble story, and again, I'll be on Twitter Spaces tonight at 6:30, so we'll be talking more. But what I would say about Humble is that what I've said in the past, we were not selling the promise, but we were talking about the promise and potential of Humble between January and the middle of summer. And now we're going to be covering the developments of Humble. So we have the NFT gallery, we got the ticket. I was looking at the ticket platform today on humblepay.com. If you haven't looked at it, go ahead and look at it. Go to the drop down, find it, the ticket platform. I went over to Busch Stadium because my Cardinals, my St. Louis Cardinals, and I grew up in St. Louis, made it last night into postseason play. The Cardinals, by the way, have won, as I sit here on the 29th of September, have won 17 games in a row. 17 games in a row. Just about 6:30 tonight Central Time, as I go on Twitter, they're going to start playing another game, going for 18. But the point is they have already now confirmed that they are in postseason play. And I went on the Humble platform for buying tickets. I didn't buy any just yet, but when you click on an outline of the stadium and you click on the different sections, it does give you a photo, which is very cool, of what view the seats have in that section of the field. So that's just one of the cool things that you'll see on there. Now, coming up tomorrow is, and I've got to do this left hand, InMode, INMD, and that's, as I've talked about before, one of my favorite stocks. If you missed it, it has really run up over the last number of years. And it just came public in August of 2019. And then, of course, it went down for a while because of COVID, as everything did. Let me bring up something that I've brought up in the past, but sometimes we're getting people who have not watched my channel before. So this is InMode. This is their revenue numbers. Look at their revenue growth. And the other thing that you could see, but is that there are huge earnings going along with that. The earnings are also very good. And what's going to be happening, and why I wanted to be talking about InMode today, is because they are going to be doing tomorrow a 2-for-1 split. And so this is a company that has been on the march. And let me go over to their chart here. And you can see as I go down, and I just wanted to remind you in case you... So let me take myself back out here. I want to show you on the far right here of the screen, each of those green dots beating the estimations on earnings. And then this is the thing that I think, again, is most cumbersome, most impressive, I should say. The green is what I showed you in the previous bar chart. That's the growth of revenue. And look at that growth of revenue, if that isn't fantastic. But look at the growth of the blue, which is the revenues, the profits. So tomorrow we're going to get, it might be at the end of trading tomorrow, I think, but September 30, you're going to get a 2-for-1 split. So you can see right now it finished just below 160. Yesterday it went down about $20. So it had been higher based upon people buying it before the split. But folks, yeah, I bought a little bit more today, and what I would say is that this company has a lot of growth going for it. And again, for those of you who didn't see, let me just play about roughly a minute of some of the video from InMode's website so you can again get a bit of the idea of what it is that they do.
InMode's cutting-edge platforms offer an extensive array of non-invasive and minimally invasive treatment solutions. Our innovative procedures include skin tightening, wrinkle treatment, skin resurfacing, pigmentation, cellulite, body contouring, and face remodeling, with multiple modalities available using hands-free innovations. We provide non-excisional and minimally invasive office-based surgical solutions to an array of medical specialties, including plastic surgery, gynecology, ophthalmology, dental, ENT, and urology. And our numbers say it all. We have seen unprecedented growth in recent years, with 2020 generating revenue of more than $200 million. Our demonstrated history of profitable growth is expected to continue well into the future. We distribute medical innovations through an established direct sales force as well as an extensive distributor network. People between the ages of 35 and 70 are increasingly looking for treatments that provide comparable results to full surgical procedures, lengthy recovery time, or scarring. The RFAL family, including BodyTite, FaceTite, AccuTite, and Aviva, delivers directional RF energy to effectively remodel tissue and fat.
So that gives you an idea there of what it is that they do. And like Humble, it is a global company, and as you may have seen, I know sometimes you need to see this stuff more than once, they are going to be offering more services going forward. So there's the stock symbol, INMD, InMode. You saw the earnings. It is certainly not a penny stock, but it is a stock that I think will be giving you good returns going forward over the next number of years. I told a friend today that they may want to hold on to that stock as with Humble for about 5 years. In fact, I had told her to buy Humble, and I hadn't talked to her in a while. And she goes, well, I got Humble at about $4.80. And I go, well, now's the time for you to go back and buy some more, because this is not going to be a company that, as we go forward over the years, this is not going to be a company that continues to be sitting below $1. It is going to be coming out, I believe, with a series of developments. One thing I did say to Brian, and he's agreed with me, that, because we just had the NFT gallery, because we just had tickets, when we get the third quarter earnings, which I guess will come out probably, I'm going to guess around maybe early November, they're not going to be like incredible, although now we'll be able to contrast the third quarter to the second quarter some. But they're not going to be incredible because late in the third quarter is going to be ending at the end of September. So that's the other thing that's coming up here. And since we just had the NFT gallery open up, since we just had the ticketing platform open up, those are not going to have very long days within the third quarter to make significant revenues, which means we will have to, for those numbers, to begin to get a flavor of how they're doing, we'll have to have a fourth quarter, and we won't get the fourth quarter until January. What Brian agreed with is not that there is a fifth quarter, you start over. So, what I said to Brian is that we really won't begin to get much of a good story on how Humble is performing until probably the end of the first quarter of 2022. So in addition to the revenues that'll be coming, one thing that Thomas asked, which was good. Is it Ticket Evolve or Evolution? Ticket Evolution, I think. He goes, did that mean the deal you did with them, does that mean that you're no longer looking for another ticket company? And Brian said, no, I'm always in the hunt for more acquisitions. And I thought it was also very interesting, and this is important, Humble, that as you know, many times I've talked about my buying Cisco. And Brian volunteered on his own. He was saying that, when you go with organic growth, and that's kind of Wall Street speak for if you're only making money internally versus going out and buying another company. You can go out and buy another company, as we did with Tickery, as we did with Monster Labs, and you bring that revenue in. So you're buying revenue, and that's a way to really grow your revenues fast. As compared to just building it internally and having your own sales, and that's all you have. So Brian was saying that Brian Foote wants to go out and buy more companies as the deals make sense. And that's also where he's going to use some of the shares that are out there for Humble to use, and use that as a currency, and not just be, increasing the company's cash burn by using dollars. He's going to go through stocks. So that's that, and that's big stuff, because that's how Cisco grew so fast back in the mid-'90s when I made my fortune in that. I mean, I as I said before, I've made money in other stocks, but I often refer to Cisco because that was a very big, life-changing kind of a money-making deal. And they were going out and they were like having an assembly line of purchasing other companies. I mean, they must have been closing on 2 or 3 different companies, it seems like a month, going from memory. Anyway, folks, I'll leave it here. We're already almost at 18 minutes. Once I get started, I don't know when to stop, so I'll just try to wrap this up. So end of September, end of the third quarter, InMode's going to be splitting. No real big move today, one way or the other. We had the markets were flat. Humble was treading water. I think the future is bright for a number of stocks. Oh, actually, one thing that is kind of important, and speaking of policies, I forgot. One of the things that's going on in Washington, and I need to say this. So this is Senator John Brasso of Wyoming, and he had a press conference earlier today holding up the spending bill that the Democrats want to pass. This is what they are calling the infrastructure bill. There is some infrastructure in it. I will tell you that I support personally that the need to spend infrastructure and do a lot of infrastructure spending for the United States. But that bill, which is 2,500 pages, is not just infrastructure spending. This is a lot of social programs, entitlements that we don't have, entitlement spending that go on and on and on, estimated by some at $3.5 trillion, but the Republicans say when you really look at it, that it is going to be more in the area of $4 to $5 trillion, and that the kind of spending that gets started there keeps going on and on. Now, I bring this up not in the vein of partisan politics, but I do cover politics, and I do invest, and I know the connection, which is why I called my channel Money and Politics, because what happens on Capitol Hill doesn't always impact us, but it certainly can many times. And if you want to spend $4 trillion, that is in one bill as much money as we operate the entire federal government, defense, Social Security, welfare, all the other programs in the federal government, our national parks, our Commerce Department, education, Veterans Affairs. That is as much as we spend annually in one bill. And as I think it was Senator Brasso, Republican senator from Wyoming, brought out, him holding the bill there, that is as much money as we spent Of all the 50 states combined, it is actually twice as much money of all the 50 states combined in 2019. Those in 2019, all 50 states combined spent about $2 trillion. So this is at least twice as much as that. So that would put a massive amount of spending. We already have some inflationary fears. And folks, I think right now what I'm hearing is that the Democrats do not have the votes to pass that. But if they do, and here the president, which I will call him a fibber on this one, says it won't cost anything, to me that's a ridiculous statement. The taxes that the Democrats want to pass, which they say will pay for the bill, only amount to about $2 trillion. Frankly, that's $2 trillion in taxes we don't need, because when you take money out of the private sector, which is where it comes from, government doesn't have any money of its own, it slows down economic growth because you're taking money out of the most efficient part of the economy and put it into the least efficient part. Government is not as efficient as the private sector. It is not creative. And this is such a big bill that you need to know that this would be like not a rat going through the snake, but like an elephant going through the snake. Again, I don't know that they have the votes to pass it, but you should be aware. The other thing, speaking of the end of September 30th, September 30th is the end of the federal government's fiscal year. So October 1 starts fiscal year 2022, and right now the budget isn't for the government isn't passed, which means they need to pass what they call a continuing resolution, because they don't have a budget passed, and you need to have a budget passed because that's a legal document, and you can't spend money without authorization to spend the money. So you can't, you need to have authorization to spend the money, and they don't have it right now. So they will probably, on Friday, the Congress will probably pass a continuing resolution to continue to keep the government operating through either the beginning of December or sometime in the month of December. The Democrats also want the Republicans to put some votes on raising the debt ceiling. The Republicans today said they would not do that, and that's where this press conference was from. They said there's no way they're going to raise the debt ceiling to allow the Democrats to have a blank check on spending and spend in the area of $4 to $5 trillion. This is the kind of thing that could really hamper the growth rate of the economy. And when that happens, when inflation comes, when interest rates rise, that has a direct impact, or maybe I should say an indirect, but a very strong correlation. As interest rates rise, that's where people pull money out of the stock market because they can get higher interest rates in bonds. You don't want to have a bond now and lock up money at, below 1% or at 1%. But if interest rates go back to where a bond, federal government, a T-bill, is giving you guaranteed returns of somewhere in the area of 5%, then the stock market has to be competing about that, and that would hurt the growth of the markets. This is one of the reasons the markets have done so well over the last 10 years is because since the market crash of 2009, we have had historically low interest rates to put more money into the economy. We use the term liquidity. The Federal Reserve has been pumping about 120, I should say, billion dollars a month into the economy. $120 billion a month into the economy. And they are going to begin cutting back on that. The terminology in Wall Street is tapering. They will probably be tapering over the course of the next 2 years, cutting back on that, which means interest rates are going to be rising, which means that yields on bonds are going to be rising, And that means that we will have more competition for stocks, which means we're going to have to be investing to grow our portfolios in more growth stocks like Humble, like InMode. So with that said, I always, again, went longer than I intended. As always, I always do that. Again, if you're watching and you haven't subscribed, please do so. There's where you can email me. You can subscribe to the channel. As we need to talk about policies, I will. Mostly I've been talking about stocks, but I know a lot of times people don't know the connection between what's happening on Capitol Hill and how that impacts the financial markets. With that said, folks, remember 6:30 p.m. tonight Central Time, I will be on the Twitter Spaces. I'll be sharing my thoughts on there. Maybe you don't need to hear me because I've just given you about a half an hour's worth. Thomas will be joining us. He may not get there, I'm not sure, but let's say roughly, might be as late as 7 o'clock or so Central Time. So with that, I'll say goodbye, and until next time, take care.